Good afternoon, everybody. This is Harmeet from Sigma Picks. Thank you for tuning in. This is your weekly SPY, QQQ, and IWM Elliot Wave analysis. And let's get going. So, not much to say. There have been a lot of things that we had discussed in the past. If you haven't been following, we were discussing that we want to see some of these pivots, this 417 pivot and the 429 pivot get taken out. Of course, we wanted to see the 393. It just tells us that there is a forward progress, there is momentum, bullish momentum in the market, and so we've pretty much have seen everything that we needed to see to say that this first wave, if this truly is the first wave, is complete. Okay, that does not mean that it may not go further. It's just all the minimum requirements that need to be met have been met. Okay, this overthrow effect is pretty normal. You see it quite a bit. Okay, we happened here where it overthrew but came back, but instantly got picked up with bullish action, and off we went. There is not much to say other than the fact that we want to stay bullish for now. There are a few other things that I will discuss. The next targets that we want to look at are your minor pivot at 435.63, and of course a major zone that you want to be aware is this 448 to 452 zone. It's the 1% zone. That's where the last B wave of this larger first wave on the way down was ending. So that just keeps us going towards the next big level of 462. There is a few things that should be noted. That the larger, so this is what we're looking at now, is not Elliot Wave. Obviously you guys can see it's just a 50-day and a 200-day moving average. Okay, and this is your 200, the green, and 50-day is this pink one. So this is your stereotypical, this right here, this move right here is your stereotypical rounded bottom breakout. Okay, and it ends exactly at 2. And so with SPY we saw that it pulled back. So now this pullback becomes extremely important, because what we were discussing is the fact that we think the first wave is over. And this is one of the major things, that when you're coming out of a bear market, and the first wave should get you to at least the 200 if you're trading below the 200, and that's exactly what happened. So now I feel like markets are going to be, people are going to be paying attention, seeing what's going on. If it breaks through the 200-day moving average, it's a simple moving average, and that would propel us in the Elliott Wave world to get us going and start of the third wave. I feel like we are in the second wave, because we had gone and ended our first wave on the 200-day simple moving average. So all that criteria is being met, and that gives us more credence to say the correction, the fourth wave correction, is over back here. Okay, there is one thing that you should also be aware of when it comes to SPY. Let's just quickly move back here. Speaking of larger structures here, that there is this larger structure here, which is a leading diagonal. Okay, this forms a leading diagonal, and we are in a correction of this leading diagonal. So there is some bearishness to be mindful of, saying that this was your A wave. Okay, we are in the B wave. Okay, and The C wave has not come to fruition yet. Okay, so that is just a larger thing, a larger, looking at the forest, not just the trees, that we should be mindful of. Again, what we do want to see is start taking out highs, okay, and we do want to see a breakthrough the 200 simple moving average and see volume, which has been dried up, volume come in. Those are the most important things that will tell you that we are actually in the fifth wave, the larger fifth wave, and we're moving towards making new all-time highs. So there's lots going on, but the fact is that we did stop at 200-day simple moving average. It looks like the first wave is over. This could still be a corrective wave because nothing has confirmed yet. So, but staying bullish is the right thing to do until we see. Again, it's the same thing going up. It is as it is going down. Let me get this marker here, price marker. We see a break through this 410 zone. Okay, so if this starts breaking through this 410 zone, I think we test the 417. But if it starts breaking through this 410 zone, then we can pretty much say that it was maybe part of a larger correction to a downtrend. So just be mindful of your trading and understand all the moving parts that are going on within SPY. All right, let's go to QQQ. Quickly, just before we look at the Elliott Wave, let's just look at that 200-day and 50-day simple moving average. We never did get to the 200-day moving average. Okay, so if it fails here, expect it just for the moving averages. Expect it to go back and test this 50-day moving average, and hopefully we'll get a move up. Okay, but this still has some work to do. There is a couple of doji gap down and gap and go here, and let's see if that comes to any sort of filtration. So here is your bear flag. We gap down from bear flag and we started moving down. So this is a little bit more bearish than it is bullish right now. We did reach, for QQQs, we did reach a major extension zone of 161 and 127 for 5 versus 3 wave. We still cannot confirm that the consolidation slash distribution is over. Okay, we did see the primary fourth wave of a larger C wave of a higher degree get taken out. So that's a start. The things again to note is that we don't want to see it go below this 314 area, and then it opens up going down to 302 and further downside. We still want to see this get over this 347 to 87 pivot. It's an important pivot. Again, it's just taking out these old highs, which are also your major Elliott Wave points. So those become very, very, very important. And again, this zone, we are pretty much in one of those areas where markets pretty much gonna be, I feel like, a little bit neutral right now. I think if we get going and break through this 347, I think confirmation is a stone skip away from there, and we should be seeing 371 get hit, and hopefully start moving towards 400. But if we start moving below this 314, that opens up this whole area down towards testing, obviously, the 302 and 275 zone again, and of course the low of this second wave of 269.28. So there's Qs tend to be, as you know, higher beta. So they will move a little bit more than SPY will move. It's just the fact that it never did get to the 200-day simple moving average. We can't really say the first wave is over. Okay, we can't really say the first wave is over right now. We can't really say that the correction is just this small correction right here is nothing more than just regular corrections that we have been seeing. So we want to see it pick it back up and go test this 200-day moving average, simple moving average, and hopefully break through it, and we'll go. So this is a prime example right here where it went back and tested it, failed, and came all the way down. And so that's what I was talking about with SPY. So let's see what happens with Qs. They are a little bit more bearish than SPY is, and that's to be said. I think we get to the 341 area, the 200-day simple moving average, and that coincides with 340 extension, and get going to 347. But also just know that you don't want to put all your chips in at this point in either way. Just let the markets decide and just tell us what it wants to do. The bearish trade comes, there's bearish, for me, bearish trade comes in when we break this 314, and the bullish trade comes in literally when we start going above the last high. That's the end of the fifth wave. Let's just quickly put that there. So we start breaking through this 334.42 pivot and start moving up. Other than that, for now, this gap down, bear flag gap down, has credence to be a little bit more bearish than bullish. Okay, let's go to our next chart. IWM, okay, so we'll just go back and quickly look at it, see what it did. It is moving along a little bit more with SPY than it is with QQQ. It did try to break through the 200-day. This gives us some thought that the first wave is over and we are in a corrective second wave, and we want to see it hold some sort of support. And there's not much to be said. This is expected. Okay, this is expected. Again, all of these, you will see that the 50-day moving average has turned up. The slope is up. Now, this positive, the slope is positive. Okay, the slope is very positive. And, but the 200 is still negative. Okay, it's still moving down where 500 is starting to move up. And that's your first sign to see it. You know, you can say this could be the first wave, and there is more evidence that suggests that we could be going into the third wave. So that being said, you can say that there is more evidence that this second wave, the corrective wave, is over here, okay? And 162 becomes 162.78 becomes the pivot that we will watch if it starts to move down. Again, the area that we want to watch is this 191, 190. Okay, this was the last fourth wave. I don't see it finished this full bullish, it's like the bullish wave, the bullish, you know, the bullish wave that we have going. Excuse me, the motive wave that we have going. And can we say that this is 1, this is 2, that this is actually 3 and 4, and this is the 5th wave? Just purely anecdotally, you can see the 5th wave is obviously smaller than the 3rd wave. So there is this alternative count that also suggests that the 5th wave is over. I just want to keep it here because it's a little bit different. It gives me an idea of, hey, you know, if it does start breaking through it, that the first wave is a little extended, depending on how this pullback is actually held. But having 2 gap downs, bear flag, gap down, go, it needs to find support before it breaks through this 190 area. If it does break through 190 area, I think that we go see 182 and maybe have a little bit more. I think the momentum is going to shift quite a bit to the bearish side if we do start breaking through this 190. Okay, and then we can say the fifth wave was over instead of third. Okay, and we can pretty much look for this 182 to be the target on the short side. And but again, for now, stay bullish. It's a little bit more bullish than uh, QQQ, but it's also a little bit more bullish than SPY because it did end up breaking your a 200-day moving uh, average. So bullishness IWM is showing more bullishness than SPY, okay, and the most bearishness is coming in with your QQQs, okay, and that makes sense. And the SPY IWM is littered with small financials and energy stocks, so it does have a little bit more credence. The IWM is a little bit more bullish than SPY and QQQ, and obviously how bad the tech sector has been hammered, which is QQQ is heavy in tech sector, and that kind of tells us, that gives us the evidence that yeah, that makes perfect sense for now, and we'll see how the markets react. Okay, I hope this really helps. It gets you prepared for the upcoming week, and I really appreciate you guys tuning in. Thank you very much. Have a great day. Bye bye.